Maynilad, Metro Manila's biggest water concessionaire, is going public. But what's really behind this IPO? Is there growth? And is it attractively priced at 15 pesos per share? Hi everyone, welcome back to Intelligent Investing Market Talk series with me, April Tan, where we help you make smarter investment decisions. Today we're talking about Maynilad, which is set to list in the PSE on November 7. The offer period runs from October 23 to 29. To help us understand more about the country's largest water utility and decide whether or not this IPO is worth subscribing to, I'm joined by COL Financials analyst Paolo Manansala, who also covers telcos and other utilities like Manila Water. Thank you, Paolo, for joining us in the show.
Hi, Miss April. Thank you again for having me.
Okay, so let's start with the very basic. Let's talk about Maynilad. Who exactly is Maynilad? And can you walk us through its concession agreement, how long it runs, and what parts of Metro Manila and nearby areas does it cover?
Maynilad is essentially the water and wastewater operator of the West Zone. Now, the West Zone includes areas as high as North Caloocan to as low as Imus, Cavite. Maynilad essentially has 11 cities under the West in Metro Manila and also 3 municipalities and cities in the Cavite province. Mm-hmm. Now, it's a concession agreement. It's an agreement, right? So it's between two parties. You may be asking, who does it have an agreement with? Basically with MWSS. MWSS is the regulator or the one who oversees the operations and the developments within Maynilad. Now, its concession runs until 2047, and so does its legislative franchise, which was just recently amended.
Yeah, like how many customers does the West Zone have versus the East Zone? So East Zone is Manila Water, and then West is Maynilad. Like how many customers?
The West Zone actually covers 10.5 million in terms of the population, while the East Zone covers around 7.5 million customers.
Mm-hmm. So the West is bigger.
Yes, essentially bigger than compared to
at least in terms of customers.
Yes,
okay.
In terms of cost.
So a while ago, you talked about the Revised Concession Agreement. So what's new about it? Why is it revised? Like how do these changes affect Maynilad's business model and profitability?
Okay. So, the Revised Concession Agreement done during the Duterte administration, essentially around 2020, when the administration saw that it was a bit they thought that it was a bit unfavorable for the public and unfair to the government with regards to the operations or how it's being regulated. So, in the Revised Concession Agreement, it is now stated that the different obligations that they have, so that the service obligation requirements that they must meet within the concession period. Also, the rate of return is more specified, which is the fixed 12% rate of return. So previously, they could go beyond, but now it's a more defined. So they have a more defined rule, so they can't go over it or below it as well. And then, I would also say they have tighter regulations in terms of the monitoring and the regulation of continuity of water supply, essentially to meet the demand that of the West Zone. So they have stricter policies for this. Other changes would also include a cap in terms of their tariff. So for water adjustments, it's capped at around 1.3 times. While wastewater adjustments is capped at 1.5 times. So those are some of the changes.
And the taxes, I think that's something that has changed. Like before, could they pass on the tax, and now, what's the policy on taxes?
So the income taxes, they're not able to pass it through the tariffs, and previously, they were able to pass it through to the people.
Okay.
Essentially.
So those are the changes, no? Okay. So everybody's been talking about the rate rebasing process, but it's a bit technical. Could you explain it in simple terms? Like, how does it actually work, and how does Maynilad make money from it?
So the rate rebasing process essentially is the government's way or MWSS's way of making sure that they are on track in terms of their payments for the unrecovered expenditures Maynilad has implemented or dispersed. So you may be wondering how do they recover this, or how do they pay down this unrecovered balance that they have? Well, they do it through tariff adjustments, which is why it's the rate rebasing. So these tariff adjustments is basically the MWSS's payment to Maynilad for building and developing all these different facilities and operating the West Zone concession.
I see. So in other words, MWSS and Maynilad kind of agree on what they need to spend on to meet certain objectives.
Yes.
And then they will allow Maynilad to earn a certain return based on what they've agreed upon.
Yes. All of this is stated again in the business plan that they've both of them agreed upon. So yeah, listed there is the different capital expenditures that they have planned, and also the different operating expenditures as well that they think that they would be incurring throughout the concession period.
Yeah. So those expenses and capital expenditures have to be agreed upon by both parties, both Maynilad and MWSS.
Yes. So basically, they have this forecast for the demand and the different facilities that they would need during the concession period. So whether it is to lower the non-revenue water, or maybe even expand its coverage, increase the number of build connections, all of these have different facilities and different expenditures needed. So if Maynilad sees that they need more, they have to talk with MWSS to approve these expenditures.
I see. Okay. So I'm just curious, because of course they have a plan, right? But what happens if Maynilad underspends compared to the approved business plan? Is this good, or do they get penalized? And how does this affect their future tariffs, if ever?
Okay. So when it comes to underspending or overspending, it really just boils down to the fact that if they themselves have fulfilled the service obligations, service concession obligations that they've stated out or they wanted to do. If these are met and MWSS sees that these expenses were justified, then in all honesty, I think there wouldn't be penalties, or there wouldn't be repercussions. But if MWSS believes that these expenditures were unnecessary and weren't helpful towards these service concession obligations, then there will be risks of penalties and even a talk about their concession. They can terminate if they see that it's too egregious of what they did. So these are some of the risks involved with it.
So in other words, if they spend too much, but MWSS believes that it's not necessary, they will not be allowed to earn that 12% return that you were talking about.
Yes. If it's not part of the approved expenditures, it would actually not count into their balance of unrecovered expenditures, which they'll be earning that fixed rate of return on.
Yes. Okay,
So, yeah.
okay. So one of the things that people talk about when they talk about Maynilad, I think one of the difficult to understand concepts is the opening cash position.
Yes.
Yeah. And that's one of its quote-unquote advantages over Manila Water. I mean, why does it matter, and how is that recovered through future tariffs?
Okay. So for the higher open cash position, as of right now, to give context, Maynilad has as of end of 2023, Maynilad has an open cash position of 100 billion, while Manila Water has an open cash position of around 27. So
Around 4 times.
yes, around 3-4 times is Maynilad's open cash position. Now, why would this matter? Like I mentioned, the open cash position is essentially the unrecovered amount of expenditures that it made to develop, operate the West Zone concession, which they'll be earning a 12% return on. So to keep it simple, the higher the open cash position, the higher the return or the higher the amount that Maynilad will be getting back. So how will they get this back? They get this back through the different tariff adjustments they'll be receiving in terms of tariff adjustments they'll be receiving, and which would also affect their profitability. And higher tariffs means higher revenues, which would essentially pay down this open cash position. So it's important to note that yes, the current balance of the open cash position is important, but you must also look at the approved expenditures moving forward to really see how big will this get, how much revenue will the government be giving back to Maynilad, right?
Okay. So essentially, if you're allowed to spend, if there are a lot of things that you're allowed to spend on, your open cash position becomes bigger.
Yes.
Right? Because if you spend on something, it adds to the open cash position.
Yes.
Right? But if, let's say you're earning money and you're not spending on capital expenditures, your open cash position goes down. Okay, so the target is by the end of the concession period, which is 2047, that number goes down to zero, right?
Yes, that the government basically paid down all of its debt.
Yeah, so the open cash position is like the debt of the government. So, okay. And I'm just curious, because it looks like at least for the West Zone, it's tariff adjustments, capital expenditures. So where will growth come from? Is it through new infrastructure, as we talked about, the CapEx, efficiency improvements, or are they still expanding service areas? Where essentially, where is it going to come from?
So growth within the West Zone concession would likely come from, apart from the tariffs, of course, you would have the natural increase in demand, so the increase in population or in build connections, but also you would have the different initiatives that Maynilad has, which is the non-revenue water reduction. So non-revenue water, just to keep it brief, it's the amount of water that is lost through either leakages, through theft, etc. And if they reduce this, it also increases the capacity of Maynilad. Now, other sources of growth could be the different facilities that they've invested on. So the Teresa water plant is expected to add around 300 megaliters per day of capacity to Manila Water. It's also to lessen the reliance in the Angat Dam. But and then apart from the Western concession, you can also talk about the different initiatives it has or prospects in terms of the reclamation projects. So whether that be the coastal bay or the harborfront projects, these all need water connections, and based on how they're positioned, it's likely that Maynilad would be the operator to capture.
So those areas are already outside of this concession?
Yes, it's apart from the West Zone concession. So if this wouldn't be part of the OCP or the different mechanisms within the revised concession.
But medyo mas long term, not in the
long
near term. Okay. So I'm looking at the CapEx, and it looks quite heavy. At least up to 2027, it's going to reach around 163 billion versus, of course, less than 100. Even less than 50 annually for the past few years. So how is Maynilad going to fund this? Will this be sourced through internally generated cash, through debt, through equity? And is this something that investors should be worried about?
Okay. So first one, the most obvious one, is the equity raise, the IPO, right? So it's looking to generate around 24 billion pesos in cash. So they mentioned that they'll be using this for capital expenditures and general corporate purposes. But they also mentioned that they're in a good position to raise debt as well, to just in case they would need to fund the future expenditure, especially if they're planning on ramping up and increasing the open cash position that they have, right? Also, they do have a history of also using blue bonds, like a blue bond raising. So they could also raise capital through those means as well. So Maynilad actually has a lot of options when it comes to
Yeah, I'm
debt
just
raising.
curious. So, they're going to borrow more. What kind of debt to equity do they currently have?
I wouldn't be too worried if I was an investor in terms of their leverage. As of right now, Maynilad's debt to equity ratio is at 1.1 times, well below their debt covenants of 2.33 times. So I wouldn't say there's really any worry when it comes to the amount of leverage that they'll be incurring when to spend for this capital.
So there really is
Expenditures.
room to increase borrowing at this point.
Yes, there's room to increase borrowing, increase spending. Yes.
Okay. Okay. So let's now talk about dividends because I know that based on the prospectus, they have a 50% payout ratio. So given the IPO price of 15 pesos, what kind of dividend yield can investors expect out of Maynilad?
So in terms of the dividend policy, it's actually the higher of the 50% of their current net income and also their 40% of their adjusted net income. So the adjusted net income is basically the net income adding back depreciation.
So whichever is higher.
Yeah, whichever is higher, that's the payout
Dividend,
they'll be giving. Yes. So for Maynila at 15 pesos, we estimate that its dividend yield, is at around 7%. Fairly attractive, I would say.
Yeah. I think 7 is a good rate,
Yes.
especially in a falling interest rate environment. So let's talk about Maynilad versus Manila Water because of course we know that's essentially what people are asking about. Like yun na nga, let's talk about dividends for example. You have a 7% dividend yield for Maynilad. I mean, how does it compare to Manila Water? And then of course, let's talk about PEs, EV, EBITDA, yeah?
Okay, so comparing the two water concessionaires in terms of valuation, EV EBITDA, Maynilad is a bit lower at around 6.6 times, and then Manila Water is at 7.2, around that. In terms of PE, it's a bit inverted. Around 6.7, 6.8, see Manila Water, and then Maynila is around 7 times. So you could say that they're within close range to each
Of the
other.
valuation.
The valuation.
Almost at par, no?
Yes.
And then dividend yield, I mean, you talked about 7% for Maynilad, and then Manila Water has...
Manila Water, given that it also dropped in price at 34, I think its dividend yield for 2026 would be around 7.2%.
slightly higher.
Slightly higher, but yeah, within the same ballpark naman sila.
So, given that their valuations are almost the same, I mean, and then, a while ago we talked about the open cash position. Who would have a faster growth, or is there a possibility that Maynilad, could be valued more expensively going forward versus Manila Water?
So, comparing the two in terms of growth, given that I mentioned higher open cash position, I would say Maynilad is in a better position to generate faster revenues, given the higher open cash position and the ramp up of expenditures that it will be having.
So we talked about valuation. Both water concessionaires are trading almost at par in terms of PE, EV, EBITDA, even dividend yield. But if we factor in the opening cash position, which you said at least Maynilad is like 3 to 4 times that of Manila Water, would this have an impact on, potential growth? And, that said, if one water concessionaire can grow faster than the other, would this mean, say, the possibility in the future of trading at a higher valuation?
In terms of revenue growth, I would say, like I mentioned earlier, Maynilad's higher open cash position makes it more likely to receive these tariff adjustments, upward revisions of tariff adjustments, right? So I guess it could be expected that Maynilad would be trading at a higher valuation than Manila Water, given that parang more profitability,
More potential.
more potential.
for spending and
for spending,
growth.
especially with the cash that's or the raising the equity that it raised from the IPO. It could be spent for CapEx and other
I
ways
see, I
to
see.
improve.
Okay. So, second to the last question, because it looks so perfect, just wondering about risks. What do you see as the biggest risk for investors? Is there regulatory delay, rate rebasing uncertainty, or maybe execution risk, cost overruns?
Okay. So for Maynilad, I see two main risks, which is firstly the non-compliance of their service obligations, and then secondly would be the legislative and political risks involved. So for the non-compliance of service obligation, as I mentioned in the Revised Concession Agreement, this was stated that they have to meet certain targets. These targets involve like NRW reduction, coverage area expansion, etc. All of these targets must be met within the concession period or the grace period that was given by MWSS. And if they failed and MWSS doesn't see it as a justified reason, they could be penalized. And even if, like for example, a natural calamity hit and there is a water shortage that happened within the West Zone concession, Maynilad is still liable to fulfill its its operations,
Obligations.
its supply of water to the West Zone, even if natural disasters do happen or unforeseen circumstances happen. So that's one of their main risks. What could happen is that they could incur penalties, so it could lower their profitability, but also it could question the concession agreement itself with MWSS. So they may be able to terminate it because of reasons that happened, because they didn't fulfill the service concession obligations. And then secondly, you have the legislative and political risk. As I mentioned also previously, in 2020, during the Duterte administration, actually, they were under scrutiny for seemingly unfair policies that were unfavorable to the public, which is why they had to come up with this revised concession agreement, which gives more power to the regulators. So with that, given that it has more power, they are at risk of the Philippine Congress basically repealing
And changing.
the different its
agreements.
operations, affecting its profitability, etc. They're always at risk of this, given that they have to answer to the government. So if I was an investor, I would still try to monitor developments, like whether or not the administration is in favor of how Maynilad or Manila Water has been operating, right? So yeah, those are the two main risks that I see when it comes to this water concession area.
Okay. But it's not just Maynilad, I would say. Even Manila Water is subject to all of that. And even the other power companies. And Okay. Okay, so finally, what's your main investment thesis for Maynilad's IPO? Why should or shouldn't investors consider subscribing?
Okay. So the main investment thesis for Maynilad would heavily rely on its predictable and steady cash flows. Given that it's a water utility company, its cash flows are a bit more predictable, especially with the open cash position. We're able to forecast basically the tariffs that it'll implement and the amount of revenue that it'll receive. So it's a very predictable business, which is why you could say it's less volatile or less susceptible to the different business cycles, I guess, right? And it's obviously another benefit to the investment would be that it's close relation with the government. So it's backed by the government. It ensures that 12% fixed rate of return is given. Maynilad.
Yes.
On top of this, you have different rooms for growth. Like as I mentioned, the different projects that it has in terms of the reclamation, so the coastal bay and the harbor front, that are a part of the, or not included in the West Zone
Right now, at
concession
least,
right
yeah.
now. And then you factor in the fact that it continuously invests in all of these facilities and all of these initiatives to improve efficiency, that is the main reason why you would want to invest in Maynilad.
Plus, of course, you could earn the 7% dividend that
And
you talked about.
yes, yes,
Which is, quite attractive for utilities.
yeah, and so mas guaranteed rin yung dividends mo given the
defensive
nature of the business. Yes.
Okay. Okay, so with that, thank you very much for, enlightening us about this Maynilad IPO, Paolo.
Yeah.
Okay, so
I hope it was insightful.
It was very insightful, I would say. Thank you so much. Water might not be as flashy as AI or tech, but it's one of the most essential and stable utility plays out there. Because of this, it is a stock worth considering as long as the price is right. If you found this discussion useful, don't forget to like, subscribe, and hit the notification bell so you don't miss out on our next deep dive. And remember, stay sharp, stay selective, and as always, invest intelligently.